Today we have a very important topic to discuss. This is crucial to know for beginners or for people who are just starting out in day trading. Doesn't matter whether you're starting out in the forex market or the crypto or the stocks market. Today we'll talk about how to actually realistically reach $1,000 in your trading deposit. We'll talk about the effect of compounding, the basic strategies, risk management, and everything you need to know in order to scale your account to your first $1,000. Now, before we talk about anything, we need to understand the context. The amount of money you make in day trading really depends on your trading capital. If you are trading with $100,000, then only 1% of your account, so one trade, would be around the value of $1,000. So you would have to only make one trade. But we know that this is not the case for majority of people, and especially people who are just starting out, even if they have bigger capital, they usually want to start low to test out this day trading and so on. So the first crucial piece of information is that you have to think about day trading differently. Now, absolute majority of people who are just starting out or even intermediate traders are thinking that day trading is some get-rich-quick scheme where basically they will put $100 and then after, for example, 2 weeks they will have $1,000 and then $10,000 and then $100,000. People are just thinking that with day trading it is so easy to get rich that everybody will just start flipping their accounts over and over and over again. And actually that's not realistic. That's really far from reality in day trading. If you have been trading already, probably you understand that it's quite difficult and it's not how it actually works. And even if you don't understand that yet, you will. Even flipping your account one time is really difficult. If you're starting, for example, with $500, flipping that account to $1,000 is really difficult. And I'm not talking about flipping it 10 times. If, for example, you would be starting with $100, flipping it to $1,000 would be actually quite impossible, or it is possible, but rather it will take years. So what to do in this situation? Well, first of all, you have to understand that if you are trading, you usually have to risk around 1 to 2%. So if you are trading with $1,000, that would be $10 or $20. And then, for example, if you're trading with $100,000, then 1 or 2% would be $1,000 or $2,000. So it's really important to understand that day trading is not really about flipping accounts from small to huge, but rather starting with a decent amount of capital that is decent to you, to your financial situation, and then actually making some stable returns from that. So if you actually manage to acquire, for example, $10,000 in your trading deposit, doesn't matter whether it is from your other income sources or investments or savings, imagine you have $10,000 in your trading account. Then according with great risk management rules, you should be risking around 1 to 2%. So from $10,000, that would be $100 or $200. Now, if you're talking about, for example, $200 trade, now that's a lot, because usually you would be taking, for example, 1 to 2 or 1 to 3 or 1 to 4 risk reward ratios. That means that you would be making, if you make a good trade, you would make around $506 or even $800. Now that's quite a lot when you think about it. And then when you have this sort of account, you only need a few trades to scale to that $1,000. You are trading with $100 and you have this position. So basically, if you're trading with $100, you would be risking around, usually around with risk management principles, around $1 or $2. So that's definitely not a lot of money. But if you are consistently adding money and you are also trading with it, and basically the whole purpose is to increase your trading deposit. So it doesn't really matter whether you're actually trading and making money and increasing your trading deposit, or you are just depositing money from your other, for example, investments on your other job. Then imagine you scale to $1,000. Now you are trading with $10 or $20. Now many people think that this is a small number, but if you think about it, if you are using 1 to 3 risk reward ratio, if you are risking, for example, 2%, which would be $20, and you are making $60 every trade, and think about it in these terms, that you are not trying to become a millionaire in one day, but rather in a systematic, for example, month-to-month basis. If you make, for example, only 10 good trades in a month, you would be making $600 a month, and that would be great extra income for you. And so how compounding works is that, imagine now you are not only consistently adding, for example, a certain amount of money to a trading deposit, but you are actually trading bit by bit, and with every trade you are increasing your trading capital, your trading deposit every month or every day consistently, and then you just scale down. And for example, when you scale your trading deposit, then the money actually scales. And again, for example, now imagine you have a $5,000 account, so 1% would be $50. So now again, you're risking, for example, $50, and that's only 1%. You could be risking more. But if you're risking $50 and you are making 1 to 3 trades risk reward ratio, or 1 to 4 risk reward ratio trades, then you could be making, for example, around $200 per every trade. And now imagine making the same, for example, 10 successful trades a month, which is worth around $200. That would give you around $2,000 of extra monthly income. So that's how trading compounding works, and that's how trading, basically that's how you become rich with day trading. It's not about thinking, and it's really important. So the conclusion of this would be that it's really important not to think about putting some basically insufficient amount of deposit, for example $100, and then expecting to flip it to, for example, $10,000. That's close to impossible to do it in a short period of time, but rather think about it in terms that you need to have as large capital as possible. So if you are working, for example, one job, you can go and find another job. You can, for example, do some freelancing or just any other way to make some extra income, which you would be able to put in your trading deposit. So we have to think about it in terms that you need as large capital in day trading as possible, and then with that capital you should maintain your risk management rules, and you should make money consistently. And that's how you become rich in day trading. Imagine if you would be putting, for example, $200 every month and trying to flip it with some crazy risk management rules, like, for example, risking 20% of that. So imagine, and you are losing, because you would basically be gambling, and that's not how trading works. So if you would be doing that, you would be just wasting $200 every month. Instead of that, you could put that $200 in your trading deposit, and you should save it and then increase it every month, and then you would have more money to trade with. So in this video, we'll not talk about strategies. I will leave that for other videos. But basically, another important tip that I will give you is have your trading plan ready. If you want to go from that beginner stage to advanced trader trade stage, you need to trade with a trading plan. So in the trading plan, you should understand, first of all, your strategy, what you are trading with, what is your strategy. Then you should understand and have in there your risk management rules. So it's not okay to, for example, one day risk 4% and the other day risk 10%. That's not okay in day trading, because you could be wrong on those bigger trades. So you have to remain consistent. So pick that consistent risk that you are taking, pick your strategy, understand what market you are trading, what macro environment you are looking at, and so on. So create your trading plan and try to master it, try to stick to your trading plan. And then when you are when you find a trading plan that actually works, a strategy that actually works, then you can scale up your capital and scale up your consistent returns, and with compounding you will become rich in day trading. So hopefully you guys enjoyed this episode. Leave that like button, subscribe